Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we had a really good day of market psychology on our hands. Now, taking a look at what all happened. Yesterday, obviously, Martin Luther King holiday, we had a small kind of range-bound, nothing happening kind of day. We closed all the way down here at 52.23, and we opened up way up here, right? Massive gap higher, over $1 up from where we closed yesterday. Now, that overall momentum to the upside, normally you'd expect to see, well, with that big of a gap, you may get a pullback and then a run higher, but when the buyers are given a chance, they don't even show up. The first candle of the day is bearish, albeit fairly weak, right? Lots of bottom edge wick. And then we go into bar 2, right? The second candle of the day showing a lot of wick on the highs. Not really that good a follow through, but continuing its way up nonetheless. And when they finally follow through to try to break out, they push back up into last week's high and then fall right back down again. Now, the overall momentum shift that we have here is buyers may have bought above this, right? And arguably it's okay. It's not the best looking signal in the world. Could be a lot better. But they're likely going to take profit at the prior week high. It makes sense. It's a big area of resistance. Just like you'd expect to see the prior high of day, prior low of day, the prior week's high and low, or the prior month's high and low. Those can be big areas of contention as well. We see a lot of inventory put in at the highs with the buyers completely giving up. The sellers show up, but they don't really show a whole lot either, right? Not too impressed by the sellers until bar 6. Right, bar 6 shows up, the buyers are completely falling apart, the sellers aren't showing a whole lot, but now we have an inside bar closing on its bottom, very aggressively bearish tone that is now shifted into the market. That also would be the secondary attempt from the sellers to come in after this is now starting to turn into a possible range. The buyers tried getting it going above, it failed, and now it's starting to come back down for the objective at the lows. We get a nice drive lower, good continuation to the downside, nice follow through, even better follow through, and all the way down for just a phenomenal move to the lows. Now this is where it gets kind of interesting, because the buyers are going to start trying to jump in thinking, well, if this is a range and we're at the bottom edge here, I'm going to start scaling into this and I want to start buying and buying and buying, right? It makes a lot of sense. You're buying the lows of a range. But, right, with this massive high side failure, there's a little bit more bearishness behind the scenes, especially when you see bar 10, very strong bull candle, and then absolutely no follow through. It couldn't even trigger the buyers in. It couldn't even go that one tick beyond the high of that candle before turning back down. And look at that candle, closing smack on its lows, massively bearish, and that is a huge clue in what to expect next, and a gorgeous area to short back down into the moving average test. Now, once we get that moving average test, the buyers tried coming in again, you know, likely assuming it's still a range. Maybe they're trying to buy an offset low, whatever they're trying to do. If they bought the offset low, it did work, but it goes doji into weak bull, into weak bear, into doji. Not very good follow through, right? That's not really going to be enough to entice a boatload of buyers in before the 17th candle of the day shows up, massively bearish again, shuts down all of the bullishness that they were able to accomplish, managed to get back to the bottom of bar 10's low. That's about all it did before turning right back down again. Now, in the room, we talked about how this was a nice selling opportunity, but it might be a little bit aggressive because you are selling towards and into and possibly through, depending on where your target is, monthly areas, but it worked out beautifully for another follow-up sell back to the downside. Now, they haven't filled the gap yet. They've got a lot of work to do before they fill that gap. They've got another 40 cents or so after already have fallen, a good amount. But just a phenomenal day of market psychology at play, knowing that the buyers are really nervous. The buyers are getting bad follow-through after bad follow-through, while the bears, on the other hand, are getting phenomenal follow-through and everything they need to see for good continuation. Really hard to ignore the sell side today on crude oil. And if you're paying attention, you were able to get into the party pretty early, but not too early. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, and we will see you tomorrow.